Good afternoon. It's April 28th, 2022. This is Ron Brown. This is going to be another short video. And I just want to record this because we're finally getting a decent rally on volume. Now I'm going to maximize this sell in thinkorswim. These are the E-minis. You can see that if you look over here, this is 6 a.m. this morning. It's very strong, and then we had a sell-off, reversed itself, went up, formed a higher high and a higher low, and then it shot up, and this is where we currently are. The E-minis are up at this point 2.27% for the day. Now the day's not over. This could reverse like it did yesterday. This is the Nasdaq. These Nasdaq futures, these pretty much trade in lockstep, but you can see the panic selling as the market went down, and now we're seeing some buying, strong buying coming in as the index goes up. Now the buying to the upside wasn't nearly as strong as the selling pressure, so we'll see if this is just an intraday move or not. I want to show you one more thing here. I want to show you the volume. This is the Nasdaq volume. I'm going to maximize this. This is a 30-day chart of the volume bars. Now if you want to compare volume, I'm just going to do a 30-minute chart. This is today, this is yesterday, and all previous days. So yesterday, let's see, where are we now? 1, 2, 3, 4, 5, 6, 7, 8. We've completed 8 30-minute segments. Let's see where we were yesterday. 1, 2, 3, 4, 5, 6, 7, 8. So volume, this is 8 from here compared to here. You can see that volume is running ahead of yesterday. Okay, I'm going to restore this to my 1 month, 1 day chart, and then restore the cells. Here's the advanced decline line. Here is what the advanced decline line, I'll use the Nasdaq advanced decline line, looked like at 9:50 this morning Central Time. It was minus 1252, had a little rally, came back down, looked like it was going to fail again, and now where we are we at 848. So a reversal from minus 1252 to 848, and like I said, this could collapse again before the day's over, but we're seeing a lot of strength. Now I just want to show you a few things here. Going to go into my designer in HGSI, and I'm going to go down to 3B indexes and sectors, and I'm going to go to tools and rebuild indexes and groups. This is rebuilding these indexes with the current stock data, and these indexes are being built with the market cap weighting setting, so the larger caps are given more weight. See, it doesn't take long to do all those. Click through to the warehouse views, and now I'm going to go in top-down scorecard views for HGSI index analysis, because these are HGSI indexes sorted on raw combo, and you can see that the semiconductor group is up the most, 5.3%. I'll just bring this chart up. And you can see this is really a beaten down chart. That's a weekly. Let me make this a daily. And I want to change to a different, I'm going to use my, what I call my Wyckoff charts, so you can see the what's happening with the volume. If I click on this, it tells me volume's low, spreads below average, but the close is very high, and the yellow indicates that there is lack of supply. Now I'm going to change this one, get out of my undercut and rally, and just go to my 1A chart, which shows me the fan and the 3 and the 6 day exponential moving averages. Now if you look to the right over here, there are columns on this view showing the advancers versus decliners. And it's a strong market right now as I go down this list. Advanced decline line 29 to 1 on the semiconductors, 19 to 1 on all of the indexes. Transports 18 to 1, utilities 14 to 1, almost 8 to 1 on the technology index, 6.5 to 1 on the Dow Industrials, and so on. The worst performer is the healthcare sector. It's slightly above 1 to, or I'm sorry, it is about 1 to 1. That's what I'm trying to say. So where do we want to be looking today? We want to be looking at the strength, and I'm going to go back to this raw combo sort on this, and let's go to the technology index. The Nasdaq 100 is here, but I'm going to go to the technology index. I'll change to that group, and then I want to go select one of my views, my other views. If I just go to the scorecard, because of the combo ranking, which is percentage range intraday and percentage price change intraday, it brings some very good candidates to the top of the list. I shouldn't say candidates. It's bringing stocks that are at the top of their range and have a high percentage gain. But you can see why I like to use this chart. This is my 1A chart because it puts everything in immediate perspective. PayPal, this is purely a bottom fish, but it is off the low, yesterday's low, and it's turning up, and it's got an effort to rise. Look at the industry group. This is really a poor stock as far as a momentum stock. It's got momentum, yes, but down to the downside. Now let's look over here at this Wyckoff view. You can see the 3 is below the 6 right here. You can also see that over here. These are exponential moving averages, but we have an effort to rise, and we also have strength seen returning today. These are current as of today. By clicking on this, it gives you that information. Also, there's a dark green bar. If I click on this area here, what's dark green? Higher volume, wider spread equals demand. And you'll see that same information right up here in this row. High volume, above average, close very high, bullish. And that is from the current bar. Now yesterday, you can see volume was above average, the spread was below average, and the close was down. So this reflects what is happening right now. Now PayPal's number 16 now. Let's go up and look at the top one, up 20% at 100% of its daily range. This is semiconductor manufacturing. Once again, the fan is down. This is really a beaten down stock. These are traders bottom fishing. And when you see charts like this, there have been attempts at bottom fishing before. Like here, went up, got up around the 18-day moving average, the brown line, and fell back. So ideally what you'd like to do is buy stocks that are pulling back and uptrending if you're buying long. I like to see stocks that are trending up, they've pulled back, they're setting up again. Those are low risk entries. This is a high risk entry because these stocks are still going down. Now they could go up several days in a row. We don't know that, but the odds are against that happening. If you look up at these columns, you can see that Atom, the 3 crossed down through the 6, 19 days ago, 0 is a crossover day, and the VPOC crossed down 6 days ago, and that's shown right here. The crossover to the downside was back. Make this up here. Right here. And the VPOC crossed down 6 days ago, but it's turning green today. So even though this market is really moving up sharply, you have to put things in perspective, be aware of what's happening, and see where the money is flowing. I'm going to do one more thing and end this video before it gets too long. I'm just going to go down here. Let's see in this folder right here, leaders up and down. Let's see if there are any leaders up intraday on volume. Now, to be a leader, you have to be in an uptrend, or the fan has to be up. And you can see this stock really pulled back, but the fan is still up. 200, 150, 18. If the 18 comes down through the 50, the fan is no longer up. Now you can see that there is a long green bar on here. This has made quite a move. Let's look at PERI. And the fan is still up here after this correction. So these stocks have remained in an uptrend even through this correction. I mean, it doesn't look like it here, but those are short-term pullbacks compared to PayPal and those another stock that I looked at. I have a lot more things that I could show you on prospecting, but I don't have time to do it in this video.